Guys, welcome to this Moneycontrol live stream. You're watching Earnings Express with me, Nandita Khemka. Well, the earnings season has been kickstarted by two tech giants, TCS and Infosys, and they largely set the tone for the entire industry, so to say. And the news is pretty good, given the fact that both TCS and Infosys have beaten expectations. TCS, revenue, margin, all of these parameters are a beat. What's come as a disappointment is the deal TCV that has come in at $8.1 billion vis-a-vis expectations of $9 to $10 billion. On the other hand, Infosys has also reported a fairly okay set of numbers, given the fact that there has been a guidance tweak. The upper end of the guidance has been reduced to 2%, while the lower end of the guidance has been hiked to 1.5%. All in all, the numbers are pretty okay. Infosys margins are in line with estimates, but profits have missed estimates. And even if you look at the USD revenues, they have gone down by 1.2% vis-a-vis expectations of 1.8%. So I have a battery of guests with me to decode the numbers of both the IT giants. Joining me is Mayuresh Joshi, who's the head of equity research, William O'Neill, India. We have Ashutosh Sharma, head of Forrester Research, India. And we have Gaurang Shah, who's a senior VP at Geojit Financial Services. Gentlemen, thanks a lot for joining in this evening. Gaurang, I want to come to you since you track TCS so closely. What are the numbers telling you? I mean, it's a beat when it comes to margins, revenues. However, the deal TCV may be a miss. But what do you make of the numbers? What are your first reactions?
Well, thank you very much, Nandita, and good evening to all of you all. So, at the beginning of this year itself, and even last year, there was subdued expectation, especially on fallback of discretionary spend and budget cuts. But at Geojit, as a brokerage house, we remain positive from a longer period of time, and we believe that there could be some amount of consolidation on the numbers front, but performance could be visible if you have a little bit of stretched time horizon. Now, numbers as far as TCS is concerned, slightly better than what the street estimates. Infosys, when you compare Q1Q, they might look a little bit shade better, but when you look at comparison between TCS and Infosys, then I believe TCS has done much better than Infosys, and TCS in fact announced a dividend of 27 rupees, which includes 18 rupees special dividend. On numbers front, well, I think we didn't expect much from the IT pack, and these numbers, we continue to remain our positive stance on the fundamental side as far as investments in TCS or Infosys are concerned.
Right, that's the view on TCS. But Mayuresh, coming to you, you've seen Infosys numbers guidance tweak. We saw a sudden spike in the shares of Infosys in the dying minutes of trade. Rather, it shot up and managed to end the day in the green. Is the guidance tweak? Will that be read into pretty positively by the street tomorrow? What is your own thought?
Evening, Anita. So I think on expected lines, I think the street was expecting the higher end of the revenue guidance to be cut to 2%. That has probably happened. The lower end of the guidance has got increased. So there is some sustainable amount of planned budgetary actions that we might be witnessing in the cycle at this juncture. Some signs of stability as far as order booking is concerned going forward as well, and pricing related to these orders as well. Also, segmentally, BFSI has been the worst hit sector, both for North America and Europe. And if management commentary, I think, is to be believed, if there are certain green shoots seen, specifically in BFSI and manufacturing, the expectations is that the next couple of quarters should largely be a bottoming out process. And the first half of the next financial year, numbers should start coming out relatively better. But again, as Gaurang pointed out,
right,
bag of sorts for Infosys.
Right. Right. Mayuresh, really apologies, gentlemen. The Infosys presser has started. We'll be, of course, watching out for a lot of commentary from the management in terms of the mega deal cancellation and a lot of other things. So really sorry for this, but we'll have to cut across to the presser where the MD Salil Parekh is addressing the media.
Recruited newer or made newer appointments. And what is the reason that you're seeing a lot of these churn that's happening? Do you see this as, a one-off event, and what are the reasons? And another thing is on the reports that are doing around about Infosys sending a communication to a rival about anti-poaching and, unethical practices. Could you give us your view on that?
Okay, thanks. Let me try and go through the questions. I think first, on the wins, in fact, this quarter has been, I think, very strong at 3.2 billion. If you look at the 9 months, it's the highest ever value of deal wins that we've had. Actually, it's more than what we had in the year before, where we had a very large deal in that instance. So we feel extremely good. 70% of this is net new, 71%. That again is extremely strong because it helps to position us for more into the future. The deal win from last quarter was also exceptional, but those are big numbers. I mean, 3 billion is really well above our average deal win in any quarter. If you look back, let's say 8, 10, 12 quarters and so on. So we feel extremely strong with that, what we see going ahead. And these have deals which are related to cost, efficiency, automation, consolidation, new work on SAP, cloud. So a lot of different areas, which is good. It's across the portfolio. I think you had a question on our senior leadership team. Again, my sense is, we have an exceptionally strong team at different levels within the company. We've continued over the last several years and even well into the past, always promote a lot of people internally with larger responsibilities. We will do that this year and in the years ahead. And the type of work that we do, people have exposure to some incredible opportunities, both with clients, with delivery, with projects. And the type of projects we're working on are quite leading. So we feel good about that. In terms of some of the media reports you alluded to, we have no real comment on that.
Thank you, Beena. The next question is from Ayushman Barua from Business Standard.
Hi. So I think the trend seems to continue that despite the large and mega deals, revenue growth has not been on par, with the deals. So when can we expect the revenue growth and the large deals to be in sync? That is one. And secondly, any specific pockets of weakness you would like to highlight, both in terms of verticals or geographies? Thank you.
So there, I'll start off and Nilanjan may add some things. I think large deals, more represent what is the level of connect we have with our clients for large transformation programs or consolidations or cost and efficiency programs. The revenue reflects both what deals contribute and then what programs clients are doing or not doing. For example, digital programs have been reduced in what we've seen over the last few quarters with clients. That really combination gives us the outcome for the revenue, and we'll see how the global economic environment evolves, and that will tell us when that comes in. Sorry, what was the second one?
It was about any pockets of...
Oh yeah, the segments. So there we are seeing, financial services, high tech, telco, where we still see impact in the market. We see growth in manufacturing, energy, utilities, life sciences. So we do see both of those things. In geography, similarly, we see impact in our North American business, but growth in the European business. So it's not sort of one thing for all.
Thank you. The next question is from Moneycontrol, Rishabh Shaw.
Hi, gentlemen. Rishabh here. So, on your headcount, year on year, we have seen a lot of headcount. So, does that indicate a weaker than expected revenue trajectory from here onwards? Your number of clients has been down month on month and year on year. So, would like to say something on that. And on furloughs, how much has that impacted revenues this quarter? And discretionary spending, when do you see it coming back?
Yeah, so I'll take a couple of them. So I think furlough is a seasonal industry impact, and it's reflected in the -1% constant currency decline. So it's part of that as well. In terms of headcount, we had already told you all last quarter that we have a lot of utilization headroom still. In a way that was led to the 6,000 odd headcount reduction. We are still at 83.7, and our comfort range is between 84, 85. So we still have some capacity, and we can always crank this up by taking more trainees, on short notice as well. So our model is very flexed in terms of ability to recruit fast, train them fast, and put them on production. So that in that sense, I think we're in a good space in terms of ability to capture any future growth.
Great. Thank you.
Thank you. The next question is from the Mint newspaper, Jas Bardia.
Hey gents, just a couple questions. At the start of the year, you had expected to grow at 7%, and now this is the third such revision. How much of this revision do you attribute to company-specific factors, and how much of it do you attribute to macroeconomic issues? The second question, did the cybersecurity incident at McCamish lead to the termination of the 1.5 billion MOU? Could you give more details on this, and also could you cite some measures that Infosys is taking to address this?
So let me start off with the guidance point first. I think on the guidance, this quarter really we see this more as a tightening of the guidance. So in that sense, it's not so much a change. It's more that as we get closer to the end of the financial year, the visibility gives us to a similar outcome. So if you look at last quarter and this quarter, it looks in that sense similar, except the distance to the end of the year is reduced by half. On the deal specifically, the MOU, we have no additional comment, and we had made a specific disclosure at the earlier time. On the McCamish question that you asked, I just wanted to maybe share with you a comment from what we had stated in our financial results. As we've shared earlier, one of our subsidiaries, Infosys McCamish, experienced a cyber security incident that resulted in the disruption of some of its services. The systems have been largely restored and are now up and running.
Thank you. The next question is from NDTV Profit, Tushar Singh.
Hi. A couple of questions. First, on the deal making, we see that the large deal wins are still happening, but they're still not meaningfully converting revenue. So when do you think that is going to come back? And are the large deals ramping up as per expectations so far? Also, your margins have declined quarter on quarter, I think because of the wage hikes that went out. But you have maintained your operational profitability guidance for the full year. So what are the margin levers left in play so that's giving you the confidence to maintain those margins? Final question on your, I think the acquisition that you have done of InSemi Tech. Can you just talk to us about it?
On the first one, I think, the way we see large deals really helping us to build a foundation into the future. And the win sizes, the overall win value is very strong at 3.2 billion. At 71%, very good to have the net new. That gives us, let's say, one piece of the revenue into the future. And equally, there are digital programs or other programs which are not something that clients are looking at in this environment. And that takes away a little bit from the revenue. So that combined gives us the revenue outcome as we see it, and as we as the outlook as we see it. So that's how we will put that together. On the margin,
so on the margin, as you've seen in our disclosure, one is we of course given our wage hike from 1st of November. That's about 70 basis points of the drop. In fact, we've dropped 70. We've had another impact of 30 million between revenue and cost because of the McCamish incident as well. So that's actually a 1.3% headwind. We've compensated that at about 50 basis points of the Project Maximus, which now is in full flow. This is across, we've talked about 5 tracks and many verticals. And there's about 10 basis points, which is from currency. And then, of course, there's a balancing around furloughs, et cetera, et cetera. So we actually are seeing a very strong underlying margin movement coming because of Maximus. And, of course, the wage hikes, et cetera, were planned and known for and are leading to this margin gap for this quarter.
The acquisition of InSemi.
Yeah, so as you know, we have a very large and growing engineering business. We don't probably talk about it as much. It's a business which working with leading engineering companies around the world. And as you know, semicon is a space which is expected from today a $500 billion market to go about $1 trillion. And this is a very exciting business in terms of semiconductor chip design, working with leading fab, non-fab players across the world. And I think it will give us, firstly, a good entry into a new space and also a new set of clients which we don't have. So we are very excited about this.
Thank you. The next question is from Haripriya Suresh from Reuters News.
Good evening, gentlemen. First, I wanted to understand, now that client budgets have firmed up, at least for the calendar year, do you see what does the deal momentum look like? Are there any signs of improvement at all? Do we expect things to look like they have so far? And on the guidance, I wanted to understand, because it was 2.5%, at the upper end, right? Like, I wanted to understand, if you're not seeing cancellations, etc., why it was narrowed at the upper end. In terms of geographies, across, this is not obviously an phenomenon, but across the companies, North America has obviously been impacted. How much is that affecting you, and is Europe sort of helping in any way? And in terms of hiring, you said that, it'd be in time. So is it fair to presume you will not be going to campuses this year, and we can sort of expect headcount to trend the way it has right now? Thank you.
So maybe sort of combining a few things on what we're seeing for the budgets as the calendar year starts. Most of our comments are really on the financial year that we are looking at. The budget process has started and launched for many of our clients. It's still early in January, so it'll sort of work its way through. At this stage, we don't see any change from what we were seeing last quarter, in that we don't see things becoming worse. We don't see any sort of change in that dynamic. We will have our own view of the next financial year as we come into the March-April timeframe, when we'll have the April results. The guidance, again, for us, it's been more of we are seeing similar outlook to what we were seeing in the past quarter, but as we get closer to the end of the year, just the variability reduces, and that's how we've narrowed the guidance. So it's not a question of reducing the upper end, because in that sense we've increased the lower end. So it's I would say it's really quite balanced between what we were seeing last quarter and this quarter.
The campus hiring.
Yes. So like I just mentioned earlier, we continues to monitor the utilization and our flexi hiring model. In fact, with COVID, which is both off campus and on campus, I think that's really been a new learning for us. So it's really on demand. We can go behind that thing. Any fresh demand comes in, and at this stage, of course, we're not seeing any immediate campus requirement. But for any volume increase, we have a very strong off-campus program as well now.
Thank you. The next question is from Haripriya Sureban from the Hindu Business Line.
Hi guys. Salil, could you give us some more color on the visibility in the market? We keep listening that the macro condition and the situation is bottoming out. Do you think so? And do you see any sort of green shoots, or what is your reading like? Which verticals do you expect to bounce back earlier? And on the margin front, do you see any impact if there is no tailwind from the currency depreciation, given that rupee has been flat for almost 1 year now?
So on the sort of outlook in the macro, we don't have a view on where it is in terms of the cycle. What we really are focused on is how that's impacted our client decision making. And there we see, what we were sharing earlier, financial services, telco, high tech, we still see the impact. Equally, we see growth in manufacturing, energy utilities, life sciences. There's a difference in the geographies as well, as we shared earlier, between North America and Europe. So at this stage, there's no more view that we have than that. We are obviously very positive with the deal wins we've got. A lot of those deals win in cost and efficiency, but there are also deal wins which we've seen, for example, in cloud, in SAP, and these are areas which we have tremendous strength in, and so we feel good. And then generative AI is becoming more and more important in all discussions. While it's not a big revenue component, it's still becoming more and more important in all discussions.
Yeah, on the currency side, we don't plan for actually any currency movement when we do our margin plans as well. So whatever comes on top from a currency benefit is actually always a bonus. So, but our underlying plans don't reflect that.
Thank you. The next question is from the Financial Express, Samir Bakshi.
Hello, sir. Please correct me if I'm wrong. You said a lot of GenAI projects are in pipeline, right? And you have around 1 lakh GenAI trained employees. So why is this that we are seeing smaller and active clients, their number have fallen? Smaller and active clients, the number has fallen.
I think if you see from a revenue perspective, which is more relevant, it's the large clients who continue to grow well. Of course, there is a longer tail, towards the 1,500 plus clients, but I mean, the biggest revenue chunk comes from the top 50, top 100, top 200.
Okay, thank you.
Thank you. The next question is from Rukmini Rao from Fortune India.
Hi, thank you. I have two clarifications and a question. One, the 30 million impact of McCamish, it has been accounted for completely this quarter?
Yes, between loss of revenue and in cost, yes.
Sure, thanks. And the other one, this is in continuation to what Beena asked. So Salil, does it mean that, I don't fathom how two companies can informally talk to each other? And if at all Infosys has actually sort of written to a peer raising certain concerns, it must be legal in nature. I mean, I'm guessing so. So could you actually tell us whether you have, had any sort of communication with your other peers when it comes to talent?
On any of the, I think you're referring to the media reports.
That's right, that's right.
So we have no additional comments on that.
But Salil, and going back to the deal that didn't fructify, right? Just want to understand from you whether, was it a client concern about Infosys' ability to be able to execute this deal, or was it a client-specific problem that you faced, or the way large deals are getting structured, or the checkboxes at the very last minute that are getting counted? What really led to this deal not fructifying? And also some sense on the large deals. Is there any fundamental change that is happening how vendors are being looked at by clients when it comes to closing large deals? Thanks.
So on the way large deals are working, in fact, in this quarter, in Q3, we've seen quite a few deals which are consolidation deals where we've been the beneficiary, where clients are looking to consolidate to select partners or strategic partners. So that's one of the things that we are visibly seeing. On the specific MOU, which was not completed, there is no additional comment. We made the comment as we made the statement as we had shared earlier. The deal flow really in the market is good, because the way we look at it, at 3.2 billion, it's well above the average that we see for large deals in any quarter. With 70% net new, that's also very strong, because that gives us a good confidence that is building out for the future. I think that then you get coupled with, there are digital programs which are not happening or slowing down, and that takes away a little bit from the possible benefits of these large deals. And that's really the balance that we're working on.
Salil, like you mentioned earlier, saying that digital deals are not still a big component of your revenue, right? But when you have another peer of yours already calling out Gen AI revenues that they're doing, when do you see actually Infosys being able to sort of call out this number or reach a size in revenues? Do you think you've sort of, where are you there in the curve when it comes to being able to grab a Gen AI deal and make it, let's say, substantial, or being able to have stateable revenues coming out of Gen AI?
So in generative AI, we have an extremely strong capability set, lot of activity with our clients. For example, we are working with a large retail company on their AI first transformation. This is a very strategic work with the client. We are working with a large global bank on their risk area to use large language models to make that risk area better for them. So we have a large number of such deals. We are not at this stage publicly sharing what the Gen AI revenue is, but we have tremendous capability, a good leading market position, and we feel in generative AI, we are very strong in the capabilities we build. For example, there are a lot of large language models out there. There are several different use cases, different benefit scenarios. We have many of them, for example, in customer service, in analytics, in data, in software engineering. So a host of areas which we are working with clients on. We have also developed what we think is an appropriate approach for large enterprises, what we call the narrow transformer approach. Here, when you're looking at large companies, the interest is not just on consumer generative AI, it's much more on what is going to make an impact to them with their data set. And so which is the appropriate large language model you can use for their data set depending on what the area is. So I believe we have an incredible capability in Topaz, and clients are also resonating with that capability. We are not today calling out the value, the generative AI value today, but that is a different subject. But the work we're doing, I think, is quite impactful.
Just to understand, the Gen AI leads that you're actually getting are from existing clients, so you've been able to get newer clients, maybe of the smaller ticket sizes. Just to understand where.
So it's a mix of both. A large number of them are existing clients. We have good relationships. They have seen our capability set, and they are, as I said, it's resonating. We've also done what we call a generative AI roadshow. It's a tour where we're taking all of our capabilities in the different locations around the world. And there are some new clients as well, where we are sort of first time doing generative AI.
Thank you. With that, we come to the end of this Q&A session. We thank our friends from media for being part of this press conference. Thank you, Salil. Thank you, Nilanjan. Before we conclude, please note that the archived webcast of this press conference will be available on the Infosys website and on our YouTube channel later today. Thank you, and we request you to join us for some high tea outside.
Thanks, Rashmi.
then, if you look at the deal wins for both the companies, TCS, it has come down a bit. It has been a little disappointing, $8.1 billion. But for Infosys, it has come in at $3.3 billion or thereabouts, vis-a-vis Kotak estimates of $2.5 billion. So, do you see any bit of improvement in the demand environment? Do you think the deal wins for Infosys will continue at a good pace going forward? What are your own thoughts?
Thank you, Nandita, and good evening. I believe the majority of the deals that Infosys is likely to declare as they have won are going to be sort of vendor consolidation deals, and Infosys seems to have done a much better job of winning those deals compared to TCS in this last quarter. Though TCS usually is very good at winning in the vendor consolidation, whether they can offer a significant amount of cost improvements there to the clients. But Infosys has done a very good job in last, I would say, a quarter or two of winning these large deals, which were primarily vendor consolidation. Now, to your question, whether this will persist, probably maybe a quarter or so, because there's a lot of robbing Peter to pay Paul going on as far as the enterprise is concerned, because their budgets are still tight. But going forward, we will see some of this discretionary spend coming back. And then at the back of that, I think both of them are expected to improve their numbers. But right now, it's mostly vendor consolidation.
And the mega deal cancellation that the company had announced, do you think that was just a one-off? Because it's not really, something usual that happens for a company like Infosys.
That is a one-off thing. I don't expect these things to come again and again. Infosys did not reveal a whole lot of details around that deal, but I don't expect that these kind of situations will emerge again and again. It must have been a client having a different expectation, changing the course or whatever the case be, but usually it's not a very common thing. However, what I'm also expecting that going forward, most of these large deals, even though they call it as an AI deal, almost all large deals will have a significant amount of AI component going forward. So, but this was certainly a one-off.
Right, coming to you, Mayuresh, valuation-wise, Infosys is far cheaper, not far cheaper, but cheaper than TCS, at 1 year forward PE of 23 times and TCS at 27x. And given the fact that Infosys is also underperformed, right, last year, do you think Infosys is much better poised when it comes to outperformance stock price-wise?
So from a valuation matrix perspective, you're absolutely right, Nandita. Infosys is very attractively placed when it comes to large cap IT. However, the reasons are well known in terms of their sheer underperformance as far as numbers are concerned. Again, numbers to a large extent, what the street largely would like to believe in the first half of the next financial year should start showing some steady state improvement and a significant improvement in the second half as well. We're probably seeing a lot of leaning that is happening towards AI, cloud computing. In the press release of TCS as well, there have been references made to AI. And therefore, I think a lot of these new age innovations and platform related enterprise solutions that will be required across organizations is obviously going to keep these outsourcing companies in good stead. So argument absolutely rightly taken that Infosys is probably placed in the right quadrant as far as valuations are concerned. However, on delivery of numbers, probably comparison between Infosys and TCS is shade better, as we say at Marketspace India, both in terms of the EPS and the RS ratings.
Gaurang, do you expect more upgrades to come in now for TCS, given the kind of numbers that they have reported, margin beat, revenue beat, or do you think there will be a sell-on news kind of a scenario tomorrow morning?
Yeah, I mean, not equipped to take any short-term calls because we don't look at that kind of time horizon. And I think upgrades, Nandita, to be very honest, I think it will take time. And as Mayuresh was also mentioning that, and our view is also that at least this financial year to see any major upgrades, if you will, on fallback of earnings looks to be difficult. We are already going through the third quarter earnings. We have the fourth quarter unfolding possibly in some time. Next financial year, Nandita, is something that we would be excited to see some decent numbers for an upgrade as far as entire IT universe is concerned. And my sense is that BFSI, along with high tech and of course creativity and cybersecurity, I think these would be the themes that will possibly be in the spotlight for both large cap as well as mid cap IT. Having said that, my enthusiasm is more towards mid-cap IT names, wherein over the last couple of quarters, you've seen some decent outperformance from mid-cap IT compared to large-cap IT. To call an upgrade right now, I think it'll be too soon.
All right. Ashutosh, coming to you, the entire poaching row with Cognizant, of course, that will take center stage, wherein Infosys and Wipro are concerned. But do you think these companies will be able to set an example for poachers and existing employees? Do you think that will set a standard here, the kind of measures that they are taking?
See, the kind of measures they are taking, I think they will be decided very soon as through arbitration or whatever mechanism they decide to take on. But usually these things don't last long. So maybe it's a phase that we are going on right now where there's a bit of a moving around of executives that's taking place as Infosys executives moving to Cognizant and vice versa, and many other situations to other mid caps as well. However, I don't expect this to last long. And as far as examples are concerned, unless one of these companies decide to take a very strict stance around it and takes it too far, I think some of these things will continue. But of course, it creates sort of a hurdle in the minds of prospective poachers, if you will. Then they will be thinking twice before taking on an exec who comes with a significant baggage or significant cost attached. So, in my opinion is a bit mixed. I would think it's a temporary, short-term phenomena which is going to last probably next 1 year or so. But beyond that, I don't expect it to continue for long.
Right, Ashutosh, so one more question. Ever since the Fed's indication of the rate hike cycle coming to an end, there have been hopes of recovery in demand environment, right? But there's still a lot of uncertainty as to when the rate cuts will really kick in. Markets are expecting 6 rate cuts vis-a-vis the Fed dot plot of 3 rate cuts, right? But given the kind of data that has come out of the United States, and of course we have the inflation data also to watch out for today, jobs data is pretty strong. Do you think the case for a March rate cut is fairly remote, because of the strength in the jobs market?
I would think the March we certainly should expect a rate cut. I don't expect one. I think sometime due this month, it's 31st, I believe. I don't expect Fed to cut rates in January because the numbers are still very similar to what we had back in December. But certainly in March, there's a significant probability that the rate cut will come, and I think most of it has already been priced in, as far as I understand from the market, in these stocks, in the exchanges, etc. But as it comes later. We expect not just in March, maybe one more in the year, if at all. Usually there are 8 situations, as you know, but in the whole year, I don't expect more than 2 or 3 at max rate cuts in 2024.
All right, 2 or 3 rate cuts that is in line with the Fed dot plot. But Mayuresh, I want to get in your thoughts on now that we have seen both the TCS and Infosys, both industry leaders reporting, not such no disappointments coming in, rather, so to say. What would you expect from the likes of HCL Tech, which was anyway touted or expected to be to being an outlier in the current quarter? Do you think HCL Tech will be the one that will walk away with the cake in this quarter at least?
I think that seems to be the case, that they will walk away with honors, take the podium spot. Largely because of the platform-based businesses, which are expected to do well from a seasonality perspective as well. And therefore, on a comparative check compared to Infosys, TCS, I'm not even including Wipro here, I'd say Tech is expected to perform better because of the sheer dynamics of the product stroke platform mix that it probably has. Secondly, again, in terms of the guidance going forward, it should be a very stable guidance that they are entered at the end of Q2 as well, when it comes to news or even the EBIT band. And therefore, the expectations in terms from a valuation matrix as well. And as we see it at Market Fit India on the canceling parameters, I think the EPSRS ratings are shade better compared to the rest of the pack, specifically for this quarter. So yeah, I think the expectation from HCL Tech relatively better than most of the market.
Right. LTI Mindtree is the other one that had hinted at a better second half, of the current fiscal. Gaurang, my question to you, do you expect the third quarter for LTI Mindtree to be similar to the previous quarter? Strong performance, I think we saw last quarter. Do you think that run rate will continue for LTI Mindtree?
Well, I guess so, because post the merger, Nandita, I think it's become one of the strongest plays, be it in terms of headcount, be it in terms of the platform and services that they offer. And mid to large cap category, LTI Mindtree, uh, Coforge, Persistent Systems, Science Limited, KPIT Tech, and Tata LXI. These are some of the names that we cover amongst the mid cap, mid to large cap IT names. And like I mentioned, Nadita, I think these names compare. I mean, of course, we've seen TCS, Infosys, HCL Tech could do a little bit better than what these two have delivered. TCS, Infosys, Tech Mahindra is the other one. Wipro is something that we'll have to be very, very careful. But amongst the mid cap or mid to large cap, I think likes of LTI Mindtree, Persistent, Coforge, uh, Cyient should do relatively better than what big boys have done.
All right, Scient is the one to watch out for, according to Gorang. My last question really is to Ashutosh. Headcount for TCS has declined by 5,600 or thereabouts. IT is cautious, IT sector is cautious when it comes to hiring. We also saw for Infosys last quarter as well. There was a decline in headcount, right? So, this trend, do you expect it to continue into the first half of the next fiscal?
Yes, I in fact expect it to continue beyond that as well, because slowly these companies are deploying a significant amount of AI to do the work which traditionally was done by developers. So we are already seeing, specifically in certain part of software development life cycle, which are getting significantly automated thanks to the artificial intelligence tools that are available. So we are seeing 20-30%, in some cases even higher, improvements in it. So I would say that going forward, headcount may not be the best indication of where exactly an organization is going to go. Maybe it will settle to a different normal, but that normal will keep on changing, and for better or worse. So as AI gets progressively deployed across these enterprises, in fact, I would expect that these companies to improve their margin on the back of that automation in next 4 quarters before clients start asking for some share of that as well.
Right. I also want to get in your thoughts on the outlook on revenue for the IT companies, right? Do you think, uh, you know, the revenues have largely bottomed out, or do you think there could be more to come given the uncertainty in the demand environment?
For this year, I would say the decline or the slowing of the growth has sort of bottomed out this quarter and probably in Q4 at the max. We expect the demand to pick up significantly, especially in financial services and healthcare in North America. We expect even government to stay flat, but contrary to Mayuresh, I believe the manufacturing and transportation and other some of those sectors will we don't expect them to do well in 2024, and especially in North America. But certainly, financial services will be a significant pickup. We expect healthcare to grow from last year. They had only 1% or so growth rate, and we expect 11% of them the growth rate, tech spend growth rate, to be 11% in 2024. 88% of the healthcare executives have said in our survey that they're going to increase the technology spending in the coming year. So we expect some of these sectors to do even better.
Uh, Gaurang, coming to you, the Infosys CEO has said that they have seen an impact in the North American business. Given the fact that Infosys has a larger exposure to North America compared to TCS, uh, the recovery for Infosys will take longer than TCS. Is that what you're maintaining?
Uh, Longer, no, but it will be slower. Don't expect anything major to transform from that part of the geography for Infosys anytime sooner. Possibly next financial year is where I would possibly expect a slight bit of improvement coming through. Not sooner than that. I think one will have to be a little bit patient with that kind of a recovery.